And debt's like a two-edged sword, man. It can cut you or it will cut for you. One thing I love to say is, I don't fear the debt if I trust the asset.
So tell me about the first property that you invested in. Like, how did you choose? What was the criteria?
No, dude, that's a great question. The first and this is where people get really caught up. They're like, what should my first property be? Should it be a single family? Should it be a multifamily? All that. I'm a big believer in imperfect action always beats standing still. So I didn't know a fraction of what I know now about real estate investing. So again, I called up my residential agent, Meredith. I'm like, Meredith, what should we invest into? She's like, well, let's go look at some houses. So I bought a house here in Michigan, in Royal Oak, Michigan, 3-bedroom, 2-bathroom house. Knowing what I know now, would I have bought that house? Yes, because it's been a phenomenal investment, but we exclusively focus on apartments now because of the difference, and this is something we can get into in like a future episode, like the NOI and the ability to really improve an apartment. Apartments treated like a business. A single family home is treated more about the comparable sales. Like your comparable sales in your area is what will value a single family home. An apartment goes off of the income, right? Profit minus expenses equals income. So I just got started on my comfort level. And I think that's what's so important for people. You have to get started with what feels comfortable to you. For me, I'd owned a home. We were in the process of buying this home. So just buying a house wasn't as scary as buying an apartment building. Now, come to find out, there's no real difference. If you can buy and invest in a home, you can go buy and invest in an apartment. Business plan's a little different, but it's your comfort level. Like, again, just getting started. Because once I got that first property, it opened up the door to go get the second and the third and the fourth and the fifth. And it's just action. Action cures anxiety. It's supply and demand. That's the one thing I really love about real estate. I know people say like Bitcoin's finite and all that. Dude, it's not real. It's not real. I'm not knocking cryptocurrency. I just don't understand it. And that's the big thing that attracted me to real estate is it is a physical hard asset. You can go touch it. You can go feel it. You can go see it. You can go improve it. Real estate is the only asset class that you can force appreciation on. You can't make Bitcoin more valuable. You can't. You can't make a stock of Coca-Cola or Apple or Starbucks more valuable. You're not in control of that. Real estate, you are in control of. So it's really good for the entrepreneur or the person who has the mind of like, I want to buy something I can fix up, I can add value to, and I can force appreciation. Back to like what we were talking about earlier of passive income. There's really nothing passive about it. If you do it right, sure, you could go buy what's called like a triple net lease, which means you have no landlord responsibilities. But you're not going to make a lot of money with that. Like we are in the building phase of a business, right? We are in the wealth growth phase, right? There's wealth accumulation, there's wealth growth, and then there's wealth perseverance. We're not there yet. When I'm 60 and 70, I'll probably own a bunch of strip malls. Who knows? Maybe I'll own spaceships because that's what we'll be flying around in then. I don't know. But right now we are looking for old apartments we can fix up, we can improve, we can make nicer. Because then like for my one that my wife and I have to go to later today, I bought it for $660 in 2021. We fixed it up, we improved it, 7 units. It was worth $1 million. I pulled all my money out of that deal. I now have a free property with the bank's money. That's the game you're looking to play. Nothing passive about it. We had third-party management, but you have to manage the managers. And then we fired them because they weren't doing a good job. So now my wife manages it. But I'm constantly on the phone, dude. Before you were here, I'm on the phone with brokers. I'm on the phone with lenders. You're dialing for dollars, right? So it's like anything. Where focus goes, energy flows, right? So if you put your focus into real estate and you run it like a business, that was my big mistake, dude. I treated it like a hobby. When I was buying single family homes, I'm treating it like a hobby. It wasn't until I realized I had a few $1 million sitting there that I started treating it like a business. So that's a huge tip. Even if you own one home, even if you own a 2-bedroom, 1-bath condo somewhere, treat it like a business and it will perform much better. That was a mistake I made. I treated it like a hobby.
So what kind of loan did you get? Just be specific. So when you were first looking to buy your first apartment complex, is it a different loan? How does that work?
Totally. Good question. So like when you buy a single family loan, this is really important. Again, this could be a whole podcast in itself. So guys, as you're listening to this or as you're watching this and you have specific questions, let us know. Leave comments on YouTube, send me a direct message, comment, on Facebook, wherever you're watching this. So we know specifically what you want to learn more about. We're kind of doing like a very general overview today, but we will do more in depth. So please let us know because it's all about you guys, helping you guys get to your goals with real estate investing. So it's totally different. Again, we could do a whole 30-40 minute podcast just on that alone. Single family, they qualify you. So you're buying the property. They look at your credit, your debt to income. They can, if it's like a duplex or a fourplex, they can qualify you somewhat based on what the property is generating. But like when I bought that house, it was a primary resident living there, so someone's home. I bought it to flip into a rental. They qualified my debt to income ratio. Now, I was making a lot of money and had low debt. There's 3 rules to money. You got to get money, protect money, and then multiply money, right? So I was really good at getting money and protecting money, and that's how I started multiplying money. You can't skip steps 1 and 2. If you make $1 million a year, but you have $2 million in personal debt, you're not going to qualify for a freaking ice cream scooper. You know what I mean? You got to learn to do that. But yeah, so it was a 30-year fixed rate debt based on my debt to income ratio. Apartments are different. They look at you, especially as you're getting started, but their first source of repayment is the apartment. They look at, how is the apartment going to repay us? When you buy a single family home, they say, how are you going to repay us? And it goes in your personal name. I have millions in debt. Millions in debt. I don't know the exact number. My wife knows. Over 5 million. Okay. But that bought me $12 million of real estate. So not too bad, right? All of my single family homes, if you pull my credit report, they show up as liabilities. All of my apartments do not. You would not even know I have the debt in the apartments because it's not in my name. I form a business entity that then takes a loan. It's the greatest, dude. It's the greatest thing on the face of the earth. I'm going to go on a tangent, but God bless America. Only in America can you literally be I was on food stamps when I was 17. Now I built a business from scratch. I became a registered dietitian, learned a skill set, built a business from scratch, right? On the internet for free, cost me nothing to do. Built that, made money, took money, invested in real estate. I can form an LLC that has nothing in it, go borrow millions of dollars from the bank in combination with my own money and go buy apartment buildings. Greatest thing in the world. That's the other thing compared to like stocks or crypto. You can't borrow money to go invest in crypto and stock. The bank won't let you do it. Bank of America will not lend you money to go buy Bank of America stock, but they will lend you money to go buy cash flow producing real estate. That's the other advantage. Leverage. I'm using the bank's money. The bank is my best friend in the world. The bank is your best friend in the world when it comes to real estate because they're giving you 75, 80% of the purchase price. And if you do your job right, if you improve that property, you get your money out of the deal. Like that 7-unit, our first apartment building, I own that property with all of the bank's money. So what's my return on investment if I have none of my own money in the deal? Infinite. I have no money. Like if I give you a 7-unit apartment building right now and I'm like, don't put any money into it, you just get the checks. What's your return on investment? Infinite. You got no money in the deal. That's the game. People don't understand. People have this like stigma with debt. There's good debt and there's bad debt. The United States is in trillions of dollars of debt. The economy and the bank loves debtors for good debt to buy assets. That is the way to wealth. Again, this could be a whole nother topic, a whole nother podcast. Nobody goes out and buys real estate in cash because you're getting a way less return on your money. Why would I go buy $1 million property in cash, put $1 million into it? I'm getting way less what's called a cash on cash return. If I put $200,000 down and leverage $800,000 of the bank's money and then make it worth $2 million, I'm getting a way bigger return on my money. So debt is the way to wealth, especially if you're not coming from money. Now, if you have some trust fund with 50 million bucks in it, dude, go buy everything in cash, right? Debt is the way to wealth. The banks are debtors. The bank is a debtor. They're borrowers, right? They borrow savers' money. It's like this whole banking crisis is going on because everyone pulled their money out, so these banks collapse. But the bank takes your hard-earned money, puts it in a savings account, and then lends it to me at 5% to go buy real estate. So the bank loves debtors. The economy loves debtors. The U.S. government loves debtors for real estate because they give me tax incentives. Gotta learn the game. Savers are losers, unfortunately, in today's economy. You cannot save your way to wealth because of inflation. So you have to learn how to use good debt to go out and buy an asset like real estate. So that's also the big difference, is just understanding that the way to wealth with real estate is smart, intelligent debt, not stupid debt. And debt's like a two-edged sword, man. It can cut you or it will cut for you. Right? It will schwack down and build, success for you, or it can cripple you. So you have to respect it. You have to trust it. One thing I love to say is I don't fear the debt if I trust the asset. So back to what we said about multifamily, they don't look at you as the main source of repayment. They look at the property. Now, if the property fails, they're coming to you. So you better trust the property. So that's what I mean. I don't fear the debt. I trust the asset.
So what happens if something goes wrong and all of a sudden you're not paying the mortgage?
They will ruin your life.
Completely ruin your life.
I mean, they will ruin your life. I'll tell you this, dude. And I've told this to lenders. If I miss a mortgage payment, 2 things have happened. I'm dead, or I'm locked in a closet in like Palestine somewhere, trapped. You know what I mean? Like I would sell everything I own before I miss a mortgage payment. There's a series of things that happen and they'll give you a little bit of grace period, but not much, man. Not much. If you miss a mortgage payment, especially on like a multifamily, you go into what's called default. They start to go through legal proceedings. The bank, and here's something else people don't know. They don't want to see you fail because the bank doesn't want to take a property back. Okay. I've learned this because I've interviewed lenders, taken too many lenders out to lunch, and I've asked too many questions. So I really understand this. Because you're right. I hear the whole Dave Ramsey, I got foreclosed on. And well, it's different times, Dave, right? 2008 was a different time. The lenders don't want to take a property. They don't want the property on the books. So they will give you opportunity. But if you start to miss payments, they're going to ask what the heck's going on. It just means you bought a bad property, you made stupid decisions, or you're just not good at managing money. Back to my original statement, you got to learn to get money, protect money, manage money, and then multiply money. That's like why I don't agree with this whole, I just buy real estate raising other people's money, because you've never even learned how to make money and protect money on your own. So why am I going to trust you with a $3 million building that makes 200 grand a year? You're going to go spend all that potentially or not know how to manage all that. So yeah, if you miss a mortgage payment, they will ruin you. They will default on you. They will, go take you to court, take the property back, ruin your credit. I mean, you're done. So don't ever get in that position. Again, if you know how to evaluate real estate, that should never happen.
So we've talked about like a ton of pros so far. I'm like fired up. I want to go buy my first apartment complex. I want you to tell me your 3 biggest cons, potential heartaches.
Love that. The 3 biggest cons, and that's good. And I really appreciate you asking that, man, because social media glamorizes things. Everyone tries to make it look so good. We try to be real, raw, and authentic. Like my wife and I aren't gurus. We try to just give you guys the real perspective of it. Con number 1, and this is your money's worth moment here. So make sure you guys write this down. Real estate is easy. People are hard. People are hard. We own 87 units. I just put an offer in on 56 more. So that brings us to what, like 140 something? That is 140 people that we are dealing with, right? And we now created our own management company. There's a lot. People are difficult. I've worked with people since I was 17 years old. And I learned that people can be challenging. People can be frustrating. People can be difficult. You need to learn how to work with people to be successful. But real estate is easy. People are hard, right? You're going to hear sob stories. You're going to hear true tragedies happen to people. People are going to die in your units, right? Crime's going to happen. Right now, we're going through an eviction. The gal that lives there hasn't paid in 6 months. 6 months. 6 months. We were under contract to sell it. I lost the contract. I lost out on a $210,000 sale that was going to 1031 to a bigger thing. Sucks. But you know what? There's a cost of doing business. So compared to anything else, I still, there's so many upside to real estate. So that's number 1. You have to deal with people, and you have to be good with people. You have to know how to manage people and all that. Number 2, I would say the big con is it's not liquid. Like if I buy a stock and I make a mistake with a stock, I can sell it and I can get out today. I'm gone. I'm out. Whatever. Or if I made a huge gain, I can get out today. And I think the market's going to crash. I think World War III is going to happen, or Joe Biden's going to do something else that's stupid. I can get out and I'm done. Real estate is slow to move, slow to rise, slow to fall, slow to get out. It takes time to get out, right? It takes time. If I bought a bad property and I'm, underwater on it and I'm suffocating, I'm in quicksand on it, I got to call an agent. I got to list it for sale. I got to pay commission to sell. I got to pay capital gains if I made money on it. It's not liquid. And I would say even the third con too is you got to have money. You got to pay to play to get in this game. Like I built a business first before I started investing in real estate. And I get so many people, I'm really humbled. They reach out, they ask questions. They say, hey, I'm just starting. I don't have much money. How do I get into real estate? My response is always not sexy, but it's don't. Go get more money. Again, the 3 rules: get money, protect money, multiply money. If you don't have money protecting, you don't have money to multiply, there's nothing to do there. If I only had $10,000 to my name, I'm not buying real estate. I'm buying education. I'm learning to make more money. I'll tell you this, it is easier to make $10,000 in a business than it is to make $10,000 in real estate. It is. Real estate's hard work, man. It's hard work. There's a lot of challenges that come with it. It's not instant unless you're like a flipper, but we don't do that, So you got to have money to get into it. You got to have money to get into it. And like I said, I'm just not a big fan of the raising of all the capital, and I have no money in the deal. It's like, who's going to give you money if you're not even going to put your own money into it? You know what I mean? So yeah, I'm happy to expand on that a little bit more, but I definitely think those are the challenges. It's people, management intensive. Well, what if you hire a third-party property manager? We did that. It's tough. Property management is not a business that makes people a lot of money unless you're doing it at scale of like thousands and thousands and thousands of units. So like my wife and I are relatively smaller. We have 87 units. The type of property managers, and nothing bad against the people who, worked with us, but type of property managers you're getting there, they're operating on razor thin margins. So they need tons of customers or tons of clients with 5 units, 80 units, 40 units, 30 units. They give you a fraction of the attention and your properties suffer. Like we started to realize our properties were suffering. So we were like, hey, we're busy in our other business. We need management here to manage these properties, but they were suffering. We were losing so much in vacancy, which means when people aren't there, the managers were taking months to fill them, which right now, like we were talking earlier, my wife's filling them in 2 days. Their maintenance were so much higher because they weren't paying attention to it. It's not their money that they're spending. It's my money. It's our money that they're spending. Just attention to detail wasn't there. So that's what's also challenging. It's very hard to hire a third-party property manager unless you have a few hundred or at least a few thousand units. So then you have to decide, well, am I going to manage the property, right? Do I want to deal with tenants, termites, and toilets? Now, hand to God, your boy here can't screw in a light bulb, so I don't deal with any of that. I utilize my wife because my wife's a real estate agent and a broker. She handles the contractor. She schedules the people. We are not going in there and fixing toilets and stuff. We're managing the contractors because that's all a third-party management does. They just are almost like a general contractor. They go out and hire other people and all that. But yeah, you have to decide, am I okay with taking, we had some properties we were paying out of pocket for. My wife's like, we can't keep doing this. We just cannot. This is not the way. She's like, this isn't what you told me it would be. And I'm like, I don't know. I don't know what's going on. I'm like, I know it's good property. I know on paper it looks good. And that's when we had to decide. We literally had to come to Jesus moment of do we sell this and give up on this, or do we take it on ourselves? And thank God my wife stepped up and she took it on herself because I can't manage real contractors and all that. I run another business. So you got to look at that. And that goes back to our total theme of the passive income. Guys, it's not passive. It is not sit on my butt all day and just collect checks. Now, the first of the month's going to come and I'm going to get a lot of checks. Full transparency, we gross, not profit, gross almost $90,000 in income from this business. Now, expenses are right, mortgage and insurance and taxes and all that. So we don't make $90,000, but that's $90,000 in income coming in. Now, all the work to protect it and preserve it and all that, it's not passive. So I think a big thing to understand, if you're going to get into real estate, you are buying a business. You buy a stock, that's an investment. You buy gold, that's an investment. You buy Bitcoin, you don't have to do anything. You buy real estate, you got to manage it. The 3 P's: people, processes, and product. Well, your product is the real estate. What are your processes? What are your processes to get tenants, recruit tenants, take care of maintenance, take care of vacancy, whatever. Then people, you got to deal with real human beings, right? Real human being. It's tough. Like any business, there's pros and cons. Do you love it? We love it. We absolutely love it. I literally can't buy a stock. It scares me too much. I'm like, I have no control. I don't understand what's going on. How do I know the CEO of Coke isn't feeling up some woman right now, is going to freaking tank the stock price, right? Bitcoin, I don't even understand it. I don't get it. It doesn't make sense to me. I don't know about the metaverse. I can't even get Wi-Fi on my Delta flights half the time. I don't think we're going to live in the metaverse anytime soon. So you got to love it. It's got to make sense to you. And then you got to follow your gut on it, but just understand it is a business.
Really quick to kind of wrap it up. Did you start making money off of your first complex, or did it take until the second one before you even really started to see anything?
Great question. On paper, yes. At the end of the year, not what it should have been. The one thing, and this can be a total episode in itself. So guys, let us know if you want to learn about the tax benefits. I'm in a very unique position. Long story short, my wife is what's called a real estate professional. It's not a license. It's not a certification. It's a tax law that says if you spend 750 hours or more per year in real estate, you can become a real estate professional. That allows you to deduct all of your losses from real estate against your main source of earned income, i.e. my online coaching business. My online coaching business, I'm blessed. It does very well because I worked very hard to build it and we deliver a great service and product for our customers, but has a high tax bill. So we are able to depreciate real estate, which just means you're able to take a deduction every year. But we do things like cost segregation studies, which allows us to accelerate depreciation. And I get to take all that against my earned income, right? So I get huge tax write-offs against my earned income. It's a loaded question, but we did make a little bit of money. The thing that was killing us was the expenses and the maintenance and the vacancy. It was more so really in our second year. My wife was looking at the yearly statements and this is not what it should be. So yes, there was a little bit of cash flow, but the cash flow definitely increases as the years go on. Now that we've got the maintenance and the vacancy in order, now it does much better. All right, guys. So that was our podcast and YouTube episode there, all about the pros and cons of real estate investing. Again, trying to give you a real life perspective, not just give you the good, but also talk to you the bad and give you some real life perspective on real estate investing. So here's what I want you to do. If you found any value in this episode, if you're watching on YouTube, be sure to leave a comment, be sure to subscribe and hit the thumbs up so YouTube will show this to more people. Or if you're listening to this on Apple or Spotify, leave us a 5-star review. We would greatly appreciate it. And hey, if you want to learn more about this, I have a free gift for you. I wrote my book, The New Rules of Financial Freedom. It's how I went on my journey of working for money to get money to work for me. And I go much more in depth in these concepts. It sells for $19 on Amazon. You can get it absolutely free as a digital download by clicking the link in the description. Okay. So whether you're on YouTube or podcast, whatever, just click the link below. You'll get a free digital download. I show you exactly the step-by-step blueprint that you can follow to start to creating financial freedom for you and your family with real estate investing. Until next time, guys, thank you so much for being here. We'll talk soon.